Sales rising to a 7-month high for February, but this is total home sales plunged to a 3-month low, down 7% in February. So what are the mixed signs telling us about the housing market? Ron Insana's out. He's got a new piece on CNBC.com saying we have hit a top in the New York real estate market, and it could have bigger implications for the entire country. Let's bring in agents from across the nation. In addition to Ron, New York, we have Austin Hoffman with Douglas Elliman in Miami, Sam DeBianchi of DeBianchi Real Estate, and from the $1 Million Listing, of course. And then in Los Angeles, Aaron Kirkman is an agent with John Arrow Group. Ron, I'm going to start with you because you have this piece where you suggest that New York City, a lot of signs in New York City anecdotally are telling you that the market is at a top.
70 cranes, 5,330.
70 cranes.
5,330 luxury apartments going up. Some of the tallest residential towers in New York going up or already up, undersold. We're starting to see deep discounting. We're starting to see a host of things associated with tops in hot markets. Average price at 432 Park, which is now the tallest residential tower in the Western Hemisphere, $21 million among the places sold. And foreign money's leaving the U.S. And so I think the bid's just coming out of Manhattan.
And to underline this, in your piece, you point out that historically, you can go back to the 20s. Every time you get to the tallest building in the Western Hemisphere, what is it telling you?
Or anywhere, for that matter.
Anywhere, yes.
Shanghai, Dubai,
yes.
Here, it's associated with a market top. When we reach for the stars, you know, as they say on Wall Street, trees, not to mix metaphors, but trees don't grow to the sky. And to me, this seems like we are going to have a dangerous oversupply against tumbling demand, particularly from overseas buyers.
Austin Hoffman, you are the real estate agent for here in New York. Speak for your city. Is it that bad?
Well, right now, actually, under 3 million, you know, we're seeing anything under 3 million, we're seeing go right off the market. You know, we put it up and it's sold, you know, and closed in a matter of weeks there. But I do believe that we're about to hit a peak and it is going to burst pretty soon.
Why?
I just think the interest rates are extremely low right now. They're actually a lot lower than we've seen in a long time. And it is actually pushing a lot of people to buy right now. But I believe that, you know, soon all these new constructions and everything is just going to come to a halt. I think we're still seeing new construction and everything from a few years back. And eventually I think it is due to burst, the bubble.
But it sounds like you also think the high end is slowing in New York.
Absolutely.
You said specifically under 3 million. And New York City is such a weird place.
That's not the high end.
That's the lower end, actually. Right. But the high end is slowing down. We're seeing a lot of price reductions with high end, anything, you know, above 4 million. We're seeing a lot of price reductions, and it's not moving as fast. But yes, the lower end of the market right now is, as spring has come,
still holding on.
Yeah, it's still holding on for now.
Yes, 3 million is the low end of the market in New York. It's painful. Sam, how is it looking in Florida, particularly in Miami?
Particularly in South Florida and Miami, prices have gone up in Miami from 9% year over year, 11% in Broward year over year, and wages have only increased about 3 to 4%. So what's that saying? It's saying that prices are increasing, but people aren't able to spend as much because they're not making as much. They're not able to catch up in this market. So what is somebody supposed to do? They can buy because rates are still very, very low, under 4% for a 30-year fixed. But if they're going to buy that home, they're going to live in that home, they're going to love that home, and they're not going to leave that home anytime soon because it's not a market to be flipping. It's a market to stay in that property for a while. And because prices are so high, a lot of people are also renting. So if you are an investor, it's still a great market to buy and rent it out because you can find those cash-on-cash returns for sometimes as much as 10%.
Miss Sam, but what about people who are not who are coming down there buying a second property? The money is coming. Sure. Maybe it's from overseas, or maybe it's from New York or Chicago or Cleveland or St. Louis. I'm guessing that they are less dependent on income growth to fund that purchase than the ordinary person in another kind of city.
Correct. And again, money is still so cheap right now. So if it is that second purchase, second home buyer, there's a lot of great inventory. I mean, I know we're talking about LA and New York, but I have a place that's under $2 million, a 3-bedroom with ocean views and skyline views in the heart of Fort Lauderdale.
Save it
and
for
again,
me.
under $2 million, under 700 square feet.
I know.
Don't tell anybody else, okay?
Hey, Aaron, what's the high end like in LA? What is the high end, Aaron, in LA? How do you define it? I mean, 3 million, is that high end, or is it 5 million or 6 million? How's it doing?
Listen, high-end real estate is anything between, up to 3 going up to the Uber, $20 million, and then above 20 is a totally different game. The high end is actually our market's doing pretty well from 1 to 15 million. We have a ton of different sales. Our numbers are actually up. We're looking good. There's a lot of movements with buyers. Where I'm beginning to see a problem is the Uber high end, 20 and up. And that's been a real slowdown.
Well, I think a lot of people are scared because of everything that's happening with the stock market and internationally as well. So there's a lot of uncertainty. There's a really big question mark as far as what to do.
I was just going to say, Sam, in your market, the foreign buyers, Brazil, I got to think, has dried up a lot because of all
They're slowing down right now. The foreign buyers are looking around,
it's slowed down. It's slowed down, but we also have a huge Canadian market as well, and we've definitely seen a decrease there as well. But again, there's still a lot of opportunity. So
yes, I know. Real estate agents always have opportunities. But let me get back to Austin. Austin, you were saying that the foreign buyers you think in New York have really dried up.
They've dried up. They're not rushing to buy anything. They're waiting. They're waiting around. They're seeing what's coming on the market and what's going off the market. It's not what we were seeing, a couple years back, where foreign buyers were just, flooding the market, buying everything in sight. They've definitely slowed down, and we're beginning to see that. Because once again, the foreign buyers, a lot of times they do buy a lot. We see them buy a lot of the higher price point. And as they said, in New York, 3 million is not necessarily our highest price point.
Well, it's, with foreign buyers, very interesting insofar as a strengthening U.S. dollar over the last couple of years has cut into their purchasing power, particularly in high-end real estate. Also, the new Treasury rules about disclosure and naming the buyer for concerns about whether or not the money coming in is clean enough and the identities are well known enough. All of this is dampening demand. And listen, I'm talking about the luxury end in New York, but this will have a ripple effect throughout Manhattan, I think.
Yeah, of course. I bet.
But I think here in LA, we're seeing a lot of the foreign buyers actually come here. There's a lot of world politics happening that they really are coming to the U.S. They still see the U.S. as a very secure, safe place to park money, probably the safest for them. Even with the China decline, we're still seeing a bunch of Chinese buyers come and invest. So that is still helping Los Angeles high-end market for sure.
Lady and gentlemen, thanks so much.
Thank you.
Loving the real estate segment. You can read Ron Insana's entire piece explaining why he is bearish on high-end New York City real estate. Right now, it's on powerlunch.cnbc.com, and Power Lunch is back in 2 minutes.